It's good day. Yeah, we just want to go through the weekly forecast. Since this is the end of this week, today is a Saturday, and we happen to see the week ending. So this is the dollar index. The dollar index, I normally use it as an indicator, just to precisely show me the direction of other currencies. Yes. So basically, a dollar index, yeah, it's so fundamental in that it gives us actually the bias, yeah, of other assets like commodities, other currencies, and also bonds and equities. So this is monthly. Monthly. What do I? Why do I? Why do I have to go to monthly? Monthly, basically, I go there to see the bias. I relate the bias using the candlestick science. So that's the candlestick logic. So you can precisely call it a candle science. So monthly, with candle science, when we just want to get the bias using candle science, we have to read the closure, the opening of this candlestick. So in monthly, as you see, monthly, we just look at two things, respect and disrespect candles, and we match them up with the PDRs, because once a candle respect is a respect candle or it's a disrespect candle, there should be a PDRA which it's respecting or which it's disrespecting. So this current month, you can see clearly it's a live candle because we are not yet at the end of this month. Yeah, we are the first quarter. So you could say this candle still live. So gauging the direction or the bias, basically I'm gonna use the previous candle, which is a monthly candle, previous monthly candle. This is a bold candle, it's a bold bullish candle, it's a bullish disrespect candle. And we can see on DXY on monthly, we are reacting off of the monthly order block. As you could see, this is the monthly demand. And precisely you could see we're having a monthly order flow. You see the bearish fair value gaps. This is the order flow leg from the swing high to the swing low. We have two bearish fair value gaps. So precisely, this is what we're gonna see. Since we have the previous monthly bullish candle, which is a disrespect candle, we're hoping for the second candle to close above the previous monthly candle high or to close above this swing high. So precisely, this is what I would see. This is what I would have into anticipation. I'll be targeting this draw on liquidity, which is the first bearish fair value gap in the long run. So this is what I'm seeing. This is the current direction in the long run. If you were to swing, so I would urge you to look at to this direction. So this is the DXY. DXY monthly, we just look at the bias, and the bias, you know, we look at the candle science, we match it with the PDRS, and the PDRS, we have the previous monthly candle high. This is where I'm expecting the first draw liquidity to happen, then to this swing high, then further we'll go in the long run to target the bear favor gap. So we are bullish on DXY, and so what we're gonna do, that's what we do on monthly, just to gauge the direction of the bias. So on weekly, we have to look for the order flow. Since we have it in mind that monthly, we are on a buy, we are buying, we are attacking the buy side liquidity. So we have to keep looking for the order flow on weekly so that we can further go on and look at also the context, the narrative. How are we gonna deliver towards the previous monthly high or towards this bearish fair value gap, which is above, which is within this monthly order flow bearish reg? So weekly, do we have an order flow? Weekly, we don't have the order flow. Yeah, weekly we have the order flow. You have the order flow. So this week closed, you could see with a nice fair value gap. So since we are on weekly, we already have the order flow. The order flow we have is a bullish order flow, and we have a presence of a bullish fair value gap. So this is what we have. Since we are buying, targeting the previous monthly high, so basically we should really know where are we gonna buy from, where are we gonna buy from, and where are we gonna target. So since we already have the target, the previous monthly high, this is the target. This is the target, is our draw on liquidity. So this should be our narrative. Our narrative, how are we gonna move? Understand? If we want to buy, where are we gonna move from towards the target, that we're having in mind? So since this is our drawn liquidity, so basically we already have the narrative, and our narrative is a weekly, a bearish fair value gap. So we would expect price to come and react off of that weekly that weekly fair value gap. It's a bearish fair value gap. This is the expectancy of price, understand, to move. So this is what I'm expecting to see. This is weekly. If you are a swinger, you know what to do. If you get a weekly context, like as you could see, you just have to go to H4. H4, you just wait for basically price to react off of that weekly context that you have, so that you can try to come up with entries. So this is what we have on H4. This is the weekly bullish fair value gap. So I'm hoping to see price come and react off of this weekly fair value gap. This is what I'm hoping to see. Yes. Then after, there are a lot of models, entry models. Maybe you would wait a shift of market structure. Definitely, yes, so that you can decide to go long. So this is what actually I'm having in mind. Yeah, if it comes to the DXY, we're still buying. We're still on a correction towards the context area, which is the weekly fair value gap. Definitely for swingers. If you're a day trader, you go further to the lower time frames. 4 hour, it has to be 15 minutes. Then you wait at least for the market maker buy model. When price stops, maybe your point of interest, the one in H4 on 15, you wait for the market maker buy model, then you go long. So this is what I have for DXY. We are selling to top our context area. Afterwards, we're gonna be looking for buys. This is what I had. Thank you.